What is going on, investors? Hopefully, you guys are having a great day out there. It is time to talk about Costco Wholesale Corporation, better known as Costco. We got a ticker symbol on this one, COST. The company just reported their Q4 numbers, and so we'll take a look at them. We'll take a look at what's going on at Costco. I tell you what, the numbers over at Costco are pretty simple, okay? And I think if you're new to trying to understand these financial documents, which we go over on every single video that we do here on the Investor Channel, because they are the most important thing, in my opinion, I will help you walk through these. And I tell you what, if you can start to understand these, then you can move to a Walmart, a Target, and then potentially up to Amazon, which I view as one of the most complicated companies to go through. We'll start with Costco, which I find to be one of the simplest. We'll also take a look at this one from a technical perspective. Monster move. Oh my goodness. Back in June, this was $387 on a stock price. It rallied all the way up to $470 just a few weeks ago, and we've pulled back. Have we created a trading range? Okay, can you start to accumulate shares of Costco, or will we wipe out this big leg and pull back? We'll talk about some key levels from a technical perspective as well. The other thing I want to do is talk about this from a valuation perspective as well. Okay, Costco rallied hard. I mean, take a look. Year to date, Costco's up 20%. Over the last year, the stock's up 31%. And it's not a heavy, like a fast growing stock. Okay, yes, they're growing revenues very nicely, but the net income kind of chugs along. And so I will look at this from a price to earnings basis as well and tell you if I think Costco is overvalued. And obviously we're going to get into the Q4 numbers as well. What I'm going to start with first is the valuation of Costco, and then we'll jump into the numbers. Now, not every company, in my opinion, you can look at from a price to earnings basis. Okay, right now I've got a 10-year chart of Costco's price to earnings. And the reason why you can't look at every company from a price to earnings basis, because you always hear the arguments, Amazon's PE is too high, Tesla's PE is too high, those types of things. It doesn't make a lot of sense, okay? First of all, you have to look at what the market's telling you. Second of all, not every company you can analyze from an earnings basis, because price to earnings goes on net income. You come all the way down to the bottom line. Okay, so the things you're factoring in is, first of all, the company has to be profitable or they don't have any earnings and their price to earnings is essentially zero. And then also their net income has interest, it has taxes, it has those things factored in. The other thing that skews companies' earnings is occasionally in their cost structure, they have a lot of stock-based compensation. You look at a Palantir, you look at even like a Tesla, you look at even like an Amazon and those types of companies, they're compensating their employees and their executives to a main degree huge in the stock. And so that's not necessarily cash, but it is treated as such when we talk about this net income. That is why here on the channel, we often stop at operating income, okay? Because interest rates change, taxes change, those types of things, but actually operating the business, that actually is a little bit better way, in my opinion, to judge most companies. But Costco is not one of those. Just like Apple, just like Microsoft, I think you can come all the way down to the net income on those companies and analyze this. So we take the price to earnings ratio. This is the price to earnings chart of what Costco has traded over for the last 10 years. This chart goes all the way back to 2011. Some of you guys might have been like in grade school or like middle school at that time, okay? And so back in 2011, this thing was trading about 24, 25 times earnings, okay? And what we've seen is it's just steadily increased. And in fact, we're at a 10-year high. We're trading at over 42 times earnings over at Costco. Previous highs were late last year in the November, December timeframe. This thing was trading about 41, 42 times earnings. So it is overvalued. I'm confident in saying that Costco is overvalued from a price to earnings basis. And the reason why I'm saying this is because when we come and look at these net income numbers, yes, we went from $4 billion up to $5 billion over the last year. They bolted on a cool $1 billion onto their bottom line net income. That's solid growth. But Are you willing to pay 42 times that? Those are the things that you want to think about as an investor. Now, in terms of the Q4 numbers, on the top line, they're going to tell you comparable sales in the US up 14.9%, in Canada 19.5%, elsewhere around the world up 15%. E-commerce, which Costco has started to focus on a little bit more, that's up 11% year over year as well. You got to love all of those types of numbers. So that could be feeding the valuation as well. Now, let's take a look at these numbers and see if this is a company that's worth paying that type of valuation. Now, the left-hand column is our most recent quarter. Again, this was our fourth quarter. So the far right-hand column is actually 52 weeks. It's the full year that Costco has just printed. You see here, we did $192 billion. Yeah, $192 billion worth of sales over the last year over at Costco. In the most recent quarter, we printed a really nice quarter, $61.4 billion. Last year, we're sitting at $52.2 billion. And you got to think, last year, people were like stocking up on crazy stuff like toilet paper and like Pepsi and these types of things. I mean, people were going absolutely nuts. And so what it showed me is Costco attracted those customers, they had their regular customers, don't get me wrong with Costco, but they attracted new customers last year, but trying to make one trip and then buy a bunch of stuff so they don't necessarily have to go to the grocery store every day and those types of things. Obviously, with the health situation, something like that could be beneficial. Okay, so they've done a nice job over the last year. We went from 52 up to $61 billion. Okay, they had grocery was on fire last year, and Costco's done a nice job maintaining that. Now, we got our membership fees here that went from 1.1 billion up to 1.2 billion. You might say, well, who cares about that? For the full year on membership fees, you're sitting at $3.87 billion, close to $4 billion worth of membership fees. You might say, well, who cares? The company had $195 billion worth of total revenue, but it's those membership fees at Costco that is essentially where all the net income, all the profit comes. Because here's what I want to show you. Here's our merchandise costs. This is in the most recent quarter. So like I talked about, we had $61 billion worth of revenue over at Costco. We had $54.7 billion of just product costs. So Costco, as you guys probably know, okay, they give away the rotisserie chicken for free, basically. I mean, they lose money on that. They lose money on the hot dogs and some of the other food that they give out there over at Costco. And so they have some loss leader products. So they actually lose money. And on the vast majority, they're making very low single-digit margins on the products. And so that's why it's interesting that Costco can get into e-commerce as well and grow that business. They probably have a lot of opportunity there. But what I want to focus on is we had $61 billion worth of sales. We had $54.7 billion worth of merchandise costs, but we got to have all the employees. We got to turn the lights on, all that other stuff. Well, that costs $5.6 billion. Okay. And so when you add 5.6 to this 54, I tell you what, you're getting really, really, really close to $61 billion. They're basically running the stores at break even. It's slightly above that. It's a couple points above that, but they're basically running the stores at essentially break even, paying their employees, making enough on the merchandise, making enough to support the business, where it's actually I don't know what a Costco membership is these days. It's not a store that I personally shop at, but this is a stock that I own. So you don't always have to be personally involved with a stock to appreciate it. That's why we always go through the numbers, and I don't talk about how I went to Costco last week and saved a bunch of money. Well, our membership fees came in at $1.2 billion. Take a look at our operating income for the most recent quarter, came in at $2.2 billion. So they made about $1 billion off $61 billion worth of sales. Those are razor thin margins. I mean, we're talking about minuscule margins on $61 billion worth of sales to make $1 billion. Well, on these membership fees, they cleared $1.2 billion, and almost all of that flows down to the bottom line because, trust me, it doesn't cost a lot for Costco to give you a little card with your picture on it. That costs next to nothing. So that is the high margin business at Costco. That is why we pay very close to these membership fees. We want them to continue to go up. That will drive profits over at Costco. Now, they've got some interest income. They've got some interest income and some expense over at this company. They do pay income taxes as well. That gets us down to net income at $1.67 billion. That's why we talk about these membership fees. Membership fees were $1.2 billion. Net income was $1.7 billion. Okay. So the vast majority of the profit over at Costco lies in those membership fees. That's why we pay very close attention to that. The other thing I want to show you is from a diluted share basis. We earned $3.76 in the most recent quarter. We're sitting at $3.13 last year. For the full year, Costco earned $11.27 per share per diluted share. And I want to show you their dividend rate over here. Their dividend rate for the full year is $3.16. I recall last year Costco paid out a big old fat special dividend. Not saying that they'll do that this year, but looking at these numbers, they have plenty, and I'm telling you, plenty of money to either raise the dividend, which I think they'll absolutely do, but they could also pay out a special dividend as well. Because when you earn $11.27 on your business, and the vast majority of your business profits lie on a very, very high margin business in terms of membership fees, you can afford to pay out the shareholders, especially when at the current time you're only paying $3.16. That's less than what they made in the quarter, let alone for the full year. Absolutely fantastic from a dividend growth perspective. That's why when we talk about the PE of Costco and those types of things, what I want you to think about as an investor is the kind of the novice investor says, oh, PE too high, next stock. Well, no, think about how long you're going to hold this, number one. Think about also what you might need in your portfolio. You might need exposure to retail, might be a sector that you're kind of underexposed to. Also, when you look at the stock chart of a Costco, it performed very well during a very, very difficult time economically, not only here in the United States, but around the world. So it gives you a little safety on that. And on top of that, it gives you dividend growth. Yes, you're only getting 0.7% yield on this one. So I would like to pick this up at a very, very nice valuation, but you will get dividend growth. You'll get the special dividends and you'll get the growth on this $3.16. So if you hold this one 10, 15, 20 years, boy, you're going to get nice payouts as you get older. So you got to love that from that perspective. From a balance sheet perspective, stock looks great. Okay. Total current assets basically flat from a year ago. A lot of that actually is wrapped up in inventory. They've got a little bit more inventory sitting on the books over at Costco. We'll see if they're able to clear through that in the upcoming quarter. I'm assuming that given how tight logistics are, getting product to yourself, getting it from overseas, getting it from the manufacturers, the wholesalers, the distributors, all those types of things, I don't think it's a bad strategy for companies like Costco to really stock up right now so they really extinguish that inventory as we go through Q4 and those types of things. Obviously, I think that would be a good thing. Now, moving on, we've got some long-term debt here, but it's basically nothing considering how much cash they have. All things being considered, this balance sheet is absolutely crystal clean. And I tell you what, that's all that Costco, they don't give you cash flows. They don't give you anything else over at Costco. Now, from a technical perspective, like we talked about this thing ran, man, it was at 380 and in like 4 months, it came all the way up here to about 470. It's pulled back. I put two lines on here. I think the top is in at 470. I think that's a logical area where some sellers have stepped in. And if the stock were to walk back up there, I think sellers would step in because, again, we've got to factor in this price to earnings is just absolutely astronomical as this stock continues to go up. And we also talked about how, yes, this company is steadily growing, but there is no catalyst to just exponentially grow this, okay? Unless they really invest in e-commerce and those types of things, which would blow up the cost structure and their profits and totally make the PE even seem more expensive. So it could be that we're forming a base here, down about $445. The stock's currently sitting at $455. If you want to accumulate, personally, what I am waiting is I'd like to add to Costco. Okay, I've got it in my son's portfolio. I've got a small position in my IRA account. I'd like to add a share or two here or there, just kind of bolt it on. Okay, I like to stay tech heavy, but I do like consumer stocks like this as well, and also somewhat margin of safety. I mean, this stock went down when the health situation happened, but it performed admirably after that. I would like to accumulate this on sideways consolidation once we find the bottoms here. And look, it could be here at 445. It could be even lower. Maybe we come down here to 435. Anywhere in here, you might get a bounce. It'll come back up, and in my opinion, come back down there and retest. That's probably where I personally would want to buy some shares at Costco. I'd also, going sideways with Costco will allow it to bolt on more net income, which will lower its price to earnings, okay? Because at the current time, this is trailing 12 months price to earnings, that's factoring in the last 12 months. Well, if Costco's price stays the same over, let's say, the next 6 months, and they're able to bolt on more net income, which I think they're absolutely going to do, well, this price to earnings ratio will actually come down. And so if this stock goes sideways, I actually think that's a good thing, especially if you're trying to accumulate shares of Costco. And I see no reason why you wouldn't want to do that, especially if the valuation gets a little bit better going forward. That was Costco. Hopefully you guys had a great day out there. We'll be back again tomorrow with the Fang Stock Recap Show. We'll see you guys again soon. Good luck with your investments.